Hello, everybody. Kirk Spano, Investing 2020s, and we have a little bit of house cleaning to do today. Next week, I will be traveling. I'm actually leaving Saturday morning, and I will not be back until Friday. I am going to Phoenix to visit the future mother-in-law. On Sunday, she should officially become a future mother-in-law, hint. So I am not doing a webinar next week at all. There will be no Monday webinar and there'll be no Thursday webinar. And in fact, this is the last Thursday webinar ever. I am going to change the Thursday webinar to Saturday mornings and do a more structured approach with a weekly report. It'll be a lot like this article that I'm writing that will be published for the weekend, so you have something to read while I'm gone. But my quarterly outlook is just about ready. I have about 20 notes that I have to copy and paste in here and a few more charts. But we are going to have a more structured approach to this presentation every week, and I will be doing it Saturday morning so that I can use Friday to finish it up with end of the week stuff. We'll take a look at the week just passed. We'll take a look at the week coming up. And on Seeking Alpha, the corresponding article will be macro dashes. At Fundamental Trends, the corresponding article will be Fundamental Trends Macro. Pretty easy. And they will be behind a paywall at both places. So to get the macro dashes, you need to be a member. Although I just launched a dividend service and a free page on Seeking Alpha. And I'm not exactly sure what gets published where, but the dividend service gets dividend stocks. And the free service, which has like 27,000 people on it already, will get the quarterly outlook. So you'll always be able to get the quarterly outlooks as long as you subscribe for free somewhere. This is going to be for free at Fundamental Trends as a library card holder. And then the weekly macro pieces, which will include some ETF coverage, will be at both places. And you will need a paid membership to see those. So where are we at? Well, I had to rewrite this a little bit because, hey, as of the end of September, I did not know that Hamas was going to attack Israel. So that changed some things. But over the last, many years, but I really talked about it a lot this summer and in spring. I suggested all along that inflation was going to come down a lot the second half of this year, particularly after Labor Day. And that is what it's going to be doing. And that's what it's done. So now you have energy prices going back up because of tension in the Middle East. And that's what I warned about. I said that inflation would continue to come down unless there was an energy spike because of something that happened in the Middle East. Well, something has happened in the Middle East and energy has reversed course. It went up and then it came down into September, and now it's jumped back up a little bit because of tension in the Middle East. And Iran is being fairly aggressive in their rhetoric, and Hezbollah has been attacking Israel from Lebanon, basically kind of test missions to see where the holes are, to see what the responses would be. If you read Foreign Affairs or you read any of the foreign intelligence that I've talked about in the past, even Bloomberg has had some good pieces on this, then what you know is that there is a pretty good possibility that this is the moment when Israel does some very strategic attacks into Iran. I don't know that will happen, but I think with the two carrier groups moving into the Mediterranean and another carrier group starting to, and they haven't announced this, but you can see it. There's tracking services out there. You can see that there's a third carrier group that is heading, through the Indian Ocean. So we are clearly preparing military assets for a Middle Eastern battleground. And again, I always hope that it doesn't happen, but I could see this being the opportunity that the West takes, however it's structured through Israel, whatever it is, to not only strike very hard at all known military assets of Hamas and Hezbollah, but I think that this might be a time that some of the nuclear facilities in Iran get bombed into oblivion. So what you'll see on the interwebs is going to be screaming and extremism from all sides, and it's going to look pretty bad. I don't think it will last very long, however, and over the next couple of months, especially because it looks like the winter is going to be mild again. I will tell you, it's 60 degrees in Wisconsin, and in my lifetime, this has been the time when we've already started to get some flurries and some snow, and I'm walking around in a t-shirt. I'm not so sure that energy prices can stay high because climate change is making winter less onerous. And if you've been watching the news, the thing that I brought up, 2 years ago now? How many of you remember this? I said that there would eventually be deals with Venezuela on oil. And we've been seeing those a step at a time the last couple of years. Saudi Arabia is also looking to do a security for oil deal because they have always been afraid of a drawn out war with Iran. So there's a lot of things going in the intermediate term that would bring the price of energy back down fairly quickly. We know that oil demand is not there anymore, that it's already flattening out. We talked about that in the last webinar, and I'll talk about it again here. And in response to some questions I got, people ask about, well, politically, can the energy transition change? And I think the answer is really no. Even if we got a second President Trump term and the Senate went back to 50-50 or 49-51 to the Republicans, and even if the House maintained a similar stature as it is now, there's not enough Republicans in the House and even in the Senate to reverse course on climate change legislation that's already happened and policies that have already happened. There just isn't the people to do it. It would take a landslide of the hard right to pivot away from the energy transition. And that is almost a zero probability that will happen. If you remember, the last 3 Republican presidents won with less than a majority of the vote. There just isn't the demographics to support a Republican wave. If there were, we would have got it in the last couple of years. It doesn't exist. I've been telling people for over a decade that Republicans would be in the minority for a very long time. The only thing that can change that, and this is just the bullet point things that I've talked about before, is if the Republicans can somehow appeal to the Hispanic vote or the black vote. And so far, they haven't been very good at either one, although they've had more success with the Hispanic vote based on some of the religious affiliations. In any case, long-term energy transition will not change, and there is a scenario here where it could be accelerated. Reminding the American people that we don't want to be dependent on the Middle East for oil is a way to make more people buy EVs. I showed you the other day, I'm selling my 4Runner, and I love my 4Runner, but I barely drive it anymore because I work from home, and we have a Volvo that will never rust. So that's going to be our long-term gasoline car, and it's 10 years newer, and we're going to buy an EV. I'm on the list for a Rivian, and I'm getting on the list for a Ford, and we'll see which one I end up with. Right now, the Rivian's too expensive. In my head, I can't justify $75,000 for a car as much as I like it. I'll probably end up with a $55,000 Ford. What I'm hoping is that the Explorer that they're building in Europe is the same one that they introduce in the United States, which is about as big as an XC90, a Volvo XC90, or a Toyota Highlander, if you're familiar with those cars. But it's based on a similar chassis, whether it's truck design or car design, because the EVs don't have much difference. Unlike cars and trucks today, there's a big difference between a car frame and a truck frame. The truck frame obviously bouncing more. I think a lot of people are thinking like me that they're looking for that spot to switch to an EV. And with the average car in America older than it's ever been before, there's a lot of people who are going to be buying cars in the next several years. And what I talked about way back at CES 2020, right? That's over 3 years ago now, 3.5 years ago now, almost 4 years. I told you that 2026 and 2027 would be the inflection years for EV sales. Everything remains on that timeline. The factory builds, getting the metals and the resources, the silicon, the lithium, everything is on pace to make that happen. The semiconductors, All of these different timelines for the components that go into an EV are all on pace to bring mass adoption on electric vehicles starting in 2026 and really picking up in 2027. Ford has already announced that they're going to get rid of most of their gasoline vehicles and diesel vehicles in Europe in 2027. They'll stop selling them, I should say. Europe itself is on a timeline from 2030 to 2035 to stop even allowing those vehicles to be sold. And the car companies are getting ahead of it. Volvo, Volkswagen in particular, right? Because they're the biggest there. And Ford and Volkswagen are actually sharing technology and platforms. So this shift to electric vehicles is right in front of us now. That waiting period from 2020 to say 2027, we're halfway through. And the car companies can't undo it. They've got way too much sunken capital. So in 2026 and 2027, you're going to see EV sales jump from middle to upper single digits in the United States to probably around half as they sell off the remaining inventory of gasoline vehicles. Now, here's the interesting thing. You'd wonder why I'm keeping a gasoline vehicle. What's the obvious answer? No fair, Teresa, don't answer. Count to 10. What's the obvious reason why you would want a gasoline vehicle after 2027? Come on, somebody's got to know this. If demand for gasoline goes down and supply of, oil stays about the same, Econ 101, right? Supply and demand. Price of gasoline is going to drop a lot. Price of oil is going to drop a lot later this decade. If you have less people buying gasoline cars and diesel vehicles, demand goes from rising at about 1% per year to falling pretty quickly. And then as those vehicles get old in the 2030s, at some point, that curve accelerates. So we're on the peak oil plateau right now with about positive 1% demand growth, switching to probably slight negative demand growth, right? So very minimal demand destruction later in the decade. By the end of the decade and into the next decade, demand destruction will accelerate. Somebody asks, won't governments force fuel prices to stay high? Well, maybe, and they can do that with taxation, right? They can manipulate things with taxation. If they don't really want it to be super cheap, they won't allow it. However, I would expect that the adoption of the vehicles doesn't really require the government after about 2027. Why? Because the cars aren't being made. The rules for fuel efficiency are so tight in the United States starting in 2026 and 2027, because I think they got an extra year under Trump, that they cannot, by law, produce a lot of gasoline vehicles. Otherwise, their fleet mileage average won't be high enough. So a lot of this is already based on legislation. That legislation prompted Ford and GM and Stellantis and Volkswagen and Toyota and everybody else to start moving away from internal combustion engine vehicles, ICE vehicles. That will not change. There's too many billions of dollars already in motion. And as we've seen, electric vehicles are coming down in price pretty quickly. Tesla is leading that charge to get market share because they know that the subscription revenue for software and other services in the car are going to make them money over time. So they can sell you a Tesla at cost and still get margin because you have a monthly subscription to software updates and everything else that they need. That's part of the deal. It's the bait. The car is the bait. Just like an iPhone is the bait. They don't really make any money on the iPhone. They make money on all that stuff that you buy through your iPhone and the advertising they get a cut of from Google. Now, if the Google deal goes away, maybe, your iPhone goes up a little bit in price, but the better models the last couple of years have not gone up in price. Disinflation. So what we are seeing right now is an event in the Middle East that's going to remind everybody that we don't like being dependent on the Middle East for oil. And then if there's some sort of a deal, price of oil comes down into the election. There's always been a correlation between gasoline prices and presidential approval. And this is held for decades. So if the price of gasoline drops in the spring and summer, that'll be very good for President Biden's reelection campaign. So I'll forecast for you the presidential election next year, just like I did the last time and I nailed, and the time before that I nailed. I mean, I have not got any of these wrong since college. I've never gotten a presidential election wrong. Even the Al Gore, George W. Bush one, it was clear to me that George W. Bush had a shot to win, and I picked him. Now, I didn't want him to win. Remember, I worked for McCain. But what's probably going to happen next year is that Democrats get the House of Representatives. President Biden is reelected, and he may not serve his entire second term. And the Senate is a coin flip. So we'll see what happens there. My guess is that it goes back to 50-50 and that the vice president is the deciding vote. That's my guess. I've looked at this pretty closely. That's not a situation where you see a lot of backsliding on policy. And if that's the one that happens, you'll get another Democratic reconciliation bill. So from what I can tell, status quo is probably going to hold with gentle pushes towards a progressive agenda, but nothing extreme. And that's really what most of us want, is something near the middle. We'll find out. Now, important things here. Small caps tend to outperform October to January. If you were waiting for that last chance to buy small caps, it's right now. You need to fill up your small cap asset allocations now. So keep an eye on your portfolio for opportunities to add to any of the small caps that you've wanted to add to. SunPower, Sunrun, Metis, go right down the satellite stocks. They're all destroyed. Metis has shown some strength lately. And going into 2024, interest rates will come down. One of the reasons I showed you a utility stock last week is that we are at the spot where the defensive stocks start to do pretty well again. An XLU, or the utility that I like that I showed you, and there's a few utilities, as interest rates fall, that'll be good for them. Not only on CapEx, but comparatively, if people can't get a great return on their cash, they'll start investing in utilities again. Now, I think we're at the very front end of this. I think you have time to get into the utilities. I think we're looking for one more dip, and that'll probably be the buying spot. So we'll want to see this come down a little bit more, just one time, one of these really oversold spots. Not quite there yet, but I think we're going to get it. The yield curve right now screams that it's going to stop being inverted sometime soon. Right now, 1 month U.S. Treasury gets more than the 30-year. That makes no sense at all. While we have slow growth forever, and interest rates on the long end probably won't ever go up to 10% again, right around 5% has historically been normal. And I do think this will switch down a little bit lower, especially at the 10-year level. I think your 10-year treasuries probably have a 3 handle at some point in the next year or two, but not much lower than that. So let's say around 4%, maybe 3.75, 3.5. This front end of the curve, though, is going to come down to the 2s. So these, basically your money market rates, are going to go back down a lot. And what will that do? If keeping money in the bank can't get you a few percent anymore, and it goes back down to 1% at the bank, right? Because there will be a spread between a 2-something% treasury and what the bank gives you. If you can only make 1% in the bank, maybe 2% on some of the CDs that are longer than a year, are people going to continue to keep trillions of extra dollars in the bank? No. That money will find new homes. So the time to buy long bonds is basically on us. There might be one more tick down on the price, which means rates might go up one more time. But that'll be it. Not only can the governments of the world not afford to have that entire curve so flat, but neither can the corporations. So everything from the 5-year and shorter has to go down. Has to. The 5-year has to go down into the 3s for sure. Otherwise, commercial loans are just too expensive. So I think the easy way to think of this is that the rates from the 1 month to the 12 month will have a 2 handle. The 2 to the 5-year will have a 3 handle. The 10-year will be about 4. 30-year will be about 5. So the long end of the curve is probably about right. 10-year be a little bit lower. But for the business cycle, right, if you're an Austrian economist, you look at this and you're like, this can't hold, or everything gets destroyed, which is what they talk about, right? They talk about things getting destroyed rather than rates changing. Rates are going to change. Things aren't going to get destroyed. We never destroy it all. We just adjust. We change things. Well, look, we pushed too far in that direction. Okay, backtrack. And that's what's coming. The Federal Reserve might raise the short-term rate one more time, but I don't think so. I think they just might be done. We'll see. If they're as smart as me, and I'm sure Austin Goolsbee is, I don't think they raise anymore. And we hope that they're smarter than me. Next year, there's a huge commercial real estate loan wall coming. The regional banks won't be able to handle it. There's going to be a lot of money in motion next year. So last year, well, actually earlier this year, I was talking to you about private equity loans for real estate projects. And those have all pretty much been held up, waiting for rates to tick back down one time. Because the internal rates of return on those projects fell below 15%, which is kind of the benchmark bar. You want internal rates of return over 15%. So next year will probably be the sweet spot for making private equity real estate investments, because you'll get the first downtick so that you can show a project with an internal rate of return of 15%. But then as interest rates come down over the next several years, you make big capital gains if the price of all the assets go up because interest rates come down. So next year is going to be a really good year for making private real estate investments and private credit transactions. The problem with private credit transactions is so much money is flooding into that market that a lot of the loans that they make are going to be shit. I mean, there's going to be some really zucking bad deals made with companies borrowing money that they used to be able to get from the banks and from the bond market, that they get from private equity firms that really don't have a lot of long-term planning. They just want as much in fees as they can get now. So while certain companies will do very well because they'll get money cheap again, as interest rates come down, as private equity gets involved where banks used to be, as hedge funds do as well, there's going to be a lot of liquidity next year. And that'll be, between now and then, the spot where you want to get invested. Because I think that there's a huge shift in money that has been coming out of the stock market for 2 years, and lately has been coming out of the real estate market back into stocks and real estate. You've got a few quarters, maybe all of next year, we'll see. But that buying opportunity is pretty much right on top of us. And remember, in my mind, right on top of us is the next year, over the next year, kind of starting right now. Small caps you should definitely be piling into. You got to pick well. Make sure you don't have companies that actually are broke. But companies like Spire Global, where they have annual recurring revenue higher than their market cap, for zuck's sake. A Metis, right? Everybody said they're broke. They just paid 54 million. They just paid $54 million of bills off, like that. And they got more money coming. I'm not sure what part of the Meta story hasn't gained traction yet. They just got $53 million net in tax credits. Right? It was $63 million gross. After fees and a little haircut, they sold those credits for $53 million, turned around and paid off $24 million of debt, and applied $30 million towards equity, which in the next couple of weeks or at earnings, we're going to find out, I think, paid off the preferred shares, which were, $3 million worth, the Proterex Corporation. And that sort of thing is going on all over the place. I have not seen, in my career, I have not seen small caps so cheap, and I'll find that chart too, relative to their revenues and their profits and everything else. I'm in almost 3 decades, I've never seen microcaps in particular and small and mid caps in general this cheap. So if you truly fancy yourself as somebody who buys assets when they're at value, right, when they're priced cheap, you have to be looking at microcaps and small caps. And while I don't like to push microcaps because they are generally in a higher risk phase of their business development, right? They're very early in their S curves. They're just so cheap right now. And the fact that they're not in the Russell 2000, if you can somehow find companies that are going to get the 300 million in market cap, which will qualify them to be on the Russell 2000, once IWM comes in there and starts buying up shares, and all the other index funds for small caps come in there and buy up shares, it just becomes a mathematical equation. Okay, who has the super tight float? And those stocks can go from 100 something million to 300 million on their own. But then once they're in IWM, from 300 million to $1 billion almost overnight. Take a year. So that's why, for those of you who have been, hey, I want to just deal with blue chips and companies I've heard of, I would say do some reading, and that way you'll have heard of some of these other companies. A lot of these micro caps are going to go up 500 or 1,000% in the next couple of years. A lot of the small caps and mid caps are going to triple and quadruple. One company I would point you to is New Fortress Energy. Their earnings are coming up. The short-term story with New Fortress is they're fast platforms for converting natural gas at the wellhead in the ocean on a barge into liquefied natural gas without ever having to take it on shore to one of those very expensive facilities. They're able to create liquefied natural gas at the wellhead in the ocean and send it to where it needs to go. Those platforms are coming on quickly now. Got the first one done a while back. I think the next one is imminent. They have a bunch more contracted. The long-term story for New Fortress Energy, because remember, they've gotten into utility businesses, particularly on islands, Puerto Rico in particular, is hydrogen. And as green hydrogen comes online later this decade, all the companies who have geared in that direction are going to do very well. If you notice the news this week, Germany is accelerating their green hydrogen plans. Look up green hydrogen, understand what it is. It's a big deal. It's going to have a role in heavy transportation, which I told you about from CES 2020. We're 3.5 years closer to all these things happening. Remember, we talked about 2 years and 10 years. Certain things happen in the next couple of years. Certain things take a decade to get put together. Small caps rallying, microcaps rallying is the next 2 years sort of thing. But a lot of the big home runs, like a lot of EV companies catching up to Tesla, and green hydrogen companies and space stocks, those are 10-year things. But because it's hard to predict which year you get your first FOMO rally, you just have to scale in. New Fortress Energy, you ought to be buying up right now because everything is going their direction on the liquefied natural gas. You know, we've gotten news already that there's not going to be any more liquefied natural gas projects developed pretty much in North America. Somebody asked about blue hydrogen. If it's not green hydrogen, it's junk. There, that's easy enough to understand. Blue hydrogen, whatever, junk. If it's not carbon neutral or carbon negative, it's junk. Doesn't get tax breaks. People don't want to use it. Everything is going in the direction of a clean energy transition. It's the easiest thing that you can follow and make a lot of money on because you don't even have to understand the technology. You just have to know that it's there, that the capital is pushing the development. Yeah, fourth industrial revolution, AI, 5G, about to be 6G. That's why I don't like AT&T. Right now, with that stock up today, you should sell AT&T right now while I'm talking if you're on this call. Capture your tax loss, sell a cash secured put if you want to maybe get back into it, or just keep collecting income from it. There is no reason to own AT&T anymore because the 6G is coming so fast that they're going to go straight from one CapEx cycle to another CapEx cycle, and the debt's just going to have to be rolled. They're not going to get rid of it, and they're more likely to have a higher expense on this next batch than a lower expense. And you should prepare for your internet charges to go up. It's not just the streamers that are going to charge you more, although I do think there will be fewer streamers in the future, not too distant future. But internet access is going to become more expensive if you have your own connection. And the problem with shared Wi-Fi, obviously, is security. So all these things, you can just watch and see what's happening. And you watch these trends, these very fundamental trends. And we know what direction the big picture is going. You can try to trade the hiccups. Good luck. You better be a superstar. You better be a shooter or Teresa. But following these big fundamental trends, these secular things that have capital deployed, that have government support, it's easy. Buy it when the crowd, which is 90% ignorant, depends on the day what I say about that, right? But we know that most people don't read anything about what they're investing in. They just invest based on their bias of the day, what they heard on TV last, what headline that they read and then stopped reading before the end of the article. Everything that we've been talking about for the last 4 years has been about right. There is a mountain of money sitting in the banks right now. As interest rates come down, that money will get reinvested in the stocks and real estate. It'll trickle in slowly because most people are uninformed and emotional, and they'll wait for the first year where the stock market is up 30 or 40 or 50% before they start to invest. And you'll get another year. That rally will last way longer than you think it's going to last. We are entering a window over the next generation where there are a couple of knowable events, the baby boomer bust for retirement and the energy transition and the impact of artificial intelligence and everything else, fourth industrial revolution and the clean energy transition. These are all things that are knowable. Most of them are bullish, or after the spanking, become bullish because we print money. I believe that the stock market is going to triple in the next 15 years or so, maybe 15 to 20 years, but that the big winners, stocks that you can tell your grandchildren or great grandchildren about, or the ones that they'll ask, how the heck did he know this or she know this, are mainly microcaps, small caps, and mid caps right now. There's not a lot of growth to the large caps because they're already large. I know I bang this drum a lot. I think it's that important right now. If you're not hearing this, if you're not accepting it, go meditate on it for a while. Clear your mind. Decide between the red pill and the blue pill, right? The matrix. You want the truth. The truth is the world's going to change a lot for the better in the next 20 years, just like it did in the last 20 years. And a lot of the expansion in the universe will snap back a little bit. What do I mean by that? I've been thinking about a way to write about this, but there is so much content out there now, so many channels, right? Just so many ways to get information, so many different stories. And I think that has contributed to a sense of lack of unity, particularly in the United States, which is where the world draws upon from. I think we start to find that unity again, because when things get better, and they are getting better, the people who talk about things that really don't make a lot of sense, but appeal to the fringes, emotions, start to lose. World War II was one of those events where fascism was almost wiped out. Not because we killed everybody, because we proved that it was such a shitty idea that people moved away from it. Communists lost the Cold War, not because we went to war, because over decades we proved it's a shitty idea. Capitalism, with constraints on greed, regulation, but without government central planning, without government ownership, it puts the power of your wallets, our collective wallets, into our own pockets, and allows people to be creative and work in ways that instinctually they gravitate towards because they enjoy them and they're good at them. It doesn't suck the creativity and the lifeblood out of their souls. Capitalism works. It's not perfect. There is no such thing as perfection as we learn, but there is excellence. And capitalism with some constraints, because money and power aggregate, we have to prevent that from allowing a handful of people to control everything and own everything and make all the money. Works. We proved it in the 50s and 60s, 70s even. And we've slid back over the last couple generations because we got, for lack of a better phrase, but one that I like, fat, dumb, and happy. We got so fat, dumb, and happy that we got cynical because in our heads we know, maybe we just have to keep working. And maybe our neighbor isn't our enemy because they voted for the other party. Maybe we all just work hard. We do what we think is good for ourselves, motivated self-interest, and we respect our neighbors to do the same thing, and it all works out. Some kid at a university figures something out over a weekend while he's drinking Mountain Dew that makes fusion work, or that allows us to mine an asteroid for all the copper we could ever need, or figures out that the microplastics that we've been putting into the oceans is incredibly harmful and we should probably change that. And by the way, he decided to invent something that does. New Light. And there's a couple other companies now. There are so many good things going on right now. If you read as much as me, you still couldn't come close to keeping up. Les, who is doing a little writing for me on the side now, he must read nonstop. So he'll have an article up tonight or tomorrow. I have to do a quick edit. He wrote something on New Fortress Energy, so it'll be a good primer. You're not looking at a collapse coming, folks. There's some hiccups for sure, but you are about to see a generational acceleration of life getting better and humanity, and this is weird for me, right? But humanity expanding into space, and all the technology that comes with that, all the investment opportunities. And by the way, we're going to save the planet from climate change. Doesn't mean that you won't want to live a little further north for a while, but we're not going to wipe out humanity because pretty much we have all the answers for fixing things. We just have to put it together, but that's going to take a generation or two. That's why we'll still use oil in 2050. It'll just be a lot less. And we'll be capturing enough carbon that will be carbon neutral. And that will allow the planet to heal and do what the planet normally does. All right. So next week, no webinars until Saturday, when I'll be doing the weekly Investing 2020s macro based on an article that I write that will include ETF coverage. On Mondays, we will have the Retirement Income Options Program, and it will be dedicated to options. We'll talk about 2 or 3 trades every week, and that'll be that. I'll update the page with the call information. The Thursday call will just become the Saturday call, and the retirement income options call on Monday will just have a different password. Somebody asked what small cap fund for ETF. If you want to do an ETF allocation, there's a couple of them. Take a look at the global trends ETF. There's two in there. In general, though, if you can, if it's in you to pick out stocks, you ought to just pick out a dozen small cap stocks and get to know them very, very well. But there are 2 funds that I have listed in the Global Trends ETF for small cap investing. They seem to be the 2 best ones. One is based on quality, one is based on price and momentum. Depending on what type of market you're in, you want to use one or the other or both. But in general, you make the most money in small caps by finding yourself a dozen small caps, and a few of them are going to go to the moon. It doesn't even matter what the rest of them do, but usually they do okay too. You'll find a stinker or two on track, but you'll dump them quick. You'll get some of your money back, and then you'll reinvest it. All right, so I will see you next Saturday morning at 10 a.m. Central is when I'm going to be doing those calls. And then I'll put them right into the edit process and have them posted by Sunday morning. So if you'd like to listen over your Sunday morning coffee, it will be available to you every Sunday morning. You can do Saturday morning live if you like. I really won't be doing any Q&A with that, I don't think. I would like you to post in the chat for Q&A so that I can answer you in writing, and then I can talk about it in the next webinar. It's difficult to do the Q&A live. Throws me off the program. However, I would love you to get into the chat rooms and ask questions, and I do keep an eye on those, and Teresa does the summary, so we don't miss too many. Get into the chat rooms. They're really useful, especially, I'll tell you, both chat rooms at Seeking Alpha and at Fundamental Trends, now that we can search things and track symbols and and post article previews and put in charts, these chat rooms are fantastic. So make sure you are using them, because I think that you're missing out if you don't stop in once or twice a week. All right, Investing 2020's out. I'll see you next Saturday morning at 10 a.m. Central, and then the following Monday at noon stays the same, but that will be dedicated to option selling. All right, take care.